Welcome to the Closing Bell. I'm Sarah Eisen. In today for Kelly Evans, Simon Hobbs will rejoin me here in a moment. And we are finishing the day on Wall Street in the green. First time in 3 sessions. Finishing out the day with a 136-point gain for the Dow Jones Industrial Average. S&P 500 up 21.5. That is more than 1%. The NASDAQ really taking the lead here, up 1.3%. Joining today's panel, former stockbroker Andrew Stoltmann from Stoltmann Law Offices. We are on the lookout for wage growth, Andrew, and we actually got a jobs report today, a JOLTS, which is sort of less than the bigger monthly jobs report, but it showed that we have the most job openings in this country since back in 2002, 2001, above 5 million.
Yes, sir. I mean, isn't that the $64 billion question right now? I mean, is the U.S. growth and this engine that really is going in the right direction, is that going to be able to take us out of all the economic malaise we're seeing with respect to other countries, from Russia to China to Japan to Greece? And that's kind of, I think, what the markets are waiting to see. It's been a kind of up and down market recently, and it's just the big question of whether the United States is going to be able to get us out of this mess, or whether every other country is going to weigh us down.
Luckily, we've got you here to answer that question.
Yeah, that's right. I'll try. Look, it remains to be seen. We're coming on earnings season.
Oh, you can't say it remains to be seen.
It remains to be seen. Absolutely.
You've got to take a judgment.
I don't have a crystal ball. You don't have a crystal ball.
Okay, if you don't take a judgment, how do you hedge?
Well, look, there are things you can do to hedge the market, and the most basic is don't put all your eggs in one basket, spread your risks out. But what I'm saying is it's too early to determine what's going to happen. Nobody knows for certain.
Don't you get paid to take the risk on the market? Isn't that the point of it?
Yeah, look, if you're willing to get into some markets that have a high degree of risk, you have a chance to be compensated for that risk. My point is that it's too early to determine what's going to go on. Nobody knows for certain.
There's so many themes that we're talking about, Andrew. What are you watching? Are you watching the earnings growth? Are you watching the economic data, the Fed? Or are you watching Greece? Because the headline on today's market was hopes for a deal, going back and forth rhetoric from the Germans and the Greeks.
Yeah, I guess I start general. I take a look at the market with a PE of about 20. Last year it was 17.5. The historical PE for the S&P 500 stocks is about 15. This is a pricey market. We have all these landmines like Greece out there that could sink the Bismarck, so to speak, and obviously a lot of other issues as well. So it's a tough market.
You're talking about price to earnings. You're
Absolutely.
talking about valuation.
Yes.
So
and just you look at it from an objective standpoint, it's a pricey market. Now, if earnings continue to accelerate the way that we're expecting them to do, great. But if there's a hiccup overseas, I think a lot of people's expectations are so high, we could see the market pull back.
So you've asked another question. You're very good at asking questions. You should have my job. Do you think there's going to be a hiccup that is actually going to derail these markets? It's a very important question because people say, look, as we go into Greece tomorrow, we're relatively immune for whatever reason.
The
because this economy is strong.
Of finance ministers.
Yes, correct. Because you've got a strong economy here, or because you have QE in Europe, we are now immune. Do you believe we're immune to the questions that you ask?
I don't think so. I mean, I think if Greece is foolish enough to pull out of and try to stiff its creditors, that's going to be a huge problem. If we hit a hard landing in China, like many people are expecting, that's going to bring this market down.
Do you think those things are likely to happen?
I think there's a greater risk of those things happening than what the market is pricing in right now. Hey, Steve,
we have to take the reality as it comes through.
Steve, I love somebody that takes a contrarian bet and is willing to go out on a cliff, and this is about as far out on a cliff as you can possibly be. I mean, in terms of the jobless numbers being very close to what we were pre-recession levels, having the economic data that we had come out from the Labor Department on Friday, I guess do you have any recommendations for how investors can profit from this if you're right, even though so many people probably don't think you're right?
Well, there's two things to do. First of all, if I'm wrong and the Federal Reserve does raise interest rates, I'm going to tell you right now it'll be the best long-duration trade you could do, buying the upcoming 10-year auction, because we're going to go to dramatically lower interest rate levels because it'd be a monetary policy mistake. That's number one. Number two, we've got a nice backroom in Treasury yields right now as well that have pushed us back to the 2% environment, and I think that's very attractive yields on a relative basis globally, and especially given the situation that's taking place in Europe and Asia. Remember, the Chinese inflation numbers that came out the other day were abysmal, and we're going to see that continue to show through.
Well, not only does Sealed Air make bubble wrap, widely viewed as America's favorite packaging material, the company is also a great barometer of the U.S. economy.
Most recently, Sealed Air announced it's moving its global headquarters from New Jersey to North Carolina.
But, Jerome, why not New Jersey? What was the reasoning for not keeping it in New Jersey?
Very quickly.
We have looked at what would be the best option for the company, and we had screened several states.
And it's warmer, most importantly.
And decided to go to North Carolina. It's a great state to attract people, and we're going to have a magnificent campus for making people work collaboratively together.
Yeah, it's amazing. You know, the Department of Revenue in Connecticut, they are keeping an eye on the top 100 taxpayers in Connecticut, not for tax evasion, but for tax retention. They say that there's a half dozen taxpayers in Connecticut who, if any one of them left, it would impact revenue. And this
is something really distasteful about tax officials pandering to billionaires. And it's like, I realize it can have a material effect. I realize they can leave for a better tax haven, but it just rubs a lot of people the wrong way.
When you're the head...
Another barrage of earnings set to report tomorrow, and one of the big names will be Tesla Motors. The company is expected to earn 31 cents a share on revenue of $1.23 billion. Let's see what the panel is expecting from that. And in general for the markets tomorrow, you're focused on volatility.
Yeah, I mean, I think investors have kind of become complacent when it comes to volatility. Historically, the markets have moved 1%, 33% of the trading days. Last year was 14%. The year before was 10%. Guess what? This is the new normal. This sort of volatility we have to expect. I think investors have become a little complacent when it comes to volatility.
I think we took, what, a 2-day breather on triple-digit moves for the Dow. We got one today, at least, though this was on the upside, where it hadn't been in the last few trading sessions. Do you see the volatility being increased as a result of what the Fed is expected to do this year?
I think what the Fed is doing, I think the international landmines, I think all of it, we should expect a lot of volatility the rest of this year.
Do we go higher or lower from here?
I'm hoping higher. I'm hoping the engine driver of United States earnings keep pushing us higher, but we'll see.